Hey guys, it's Market Update. In this video, I want to talk about one of the main fears of a lot of people right now, which is if unemployment is rising a little bit and the economy is slowing, won't that crash Bitcoin and crypto prices? Potentially, but I think the strategy around this is actually fairly simple. So I just want to go through that in this video and some data around where exactly we are in this cycle, because I'm still very, very bullish on the rest of this cycle. So coming to the Bitcoin price right now, we are just consolidating. It's boring. Nothing's really happening. There's nothing to read into the price action. It's a summer consolidation at this point. All of the narratives have been traded at this point. We're just waiting for the data to come out, waiting for the Fed to make their move, and then see where that comes out at. And then the market can reprice accordingly. For right now, it's just a consolidation, and that's it. At all-time highs, by the way. We're not even in a big correction. From the literal all-time high price, we're down 13% for BTC. I know alts are a lot more volatile than that, but this is a normal correction. So what's the strategy around, the next 6 months or 12 months? I personally believe we're in a big bull market. And so long-term investors through the first half, keep buying, buy dips, buy dollar cost average. And it's just when you get to the peak of a bull market, the very, very late stages of a bull market, that you can start to think about, what cash do I need over the next year or so? If there's going to be a 40, 50% drawdown, am I okay with that? For right now, we are still in the earlier stages, which I'll go through. And so, just being consistent, because the latter stages is where you get the big moves. Now, for the short term, unemployment is starting to tick higher. The economy is, the economic data is starting to miss to the downside. And so the market may be worrying, are earnings going to come down? Is unemployment going to tick higher? People start getting worried and selling out, right? Getting scared, selling out of their liquid assets, of which crypto is. So there's that fear there. I think it's a really simple strategy for that. We don't know how this is going to turn out. We don't know if it's just going to be a soft easing and then markets melt up, or whether something's going to get a little bit more crashy. There's a simple trade around that, which is at the current price, you're in a consolidation. So what should you do if you want to try and trade potential crashes and potential Fed easing? Well, if you're taking long positions, then there's two trades to be made and maybe a half and half situation. The first one is we actually just consolidate around this level. The market data comes a bit weak. Fed, starts to get a bit more dovish, and this is the actual low for this pullback, and you go higher. So an easy trade there is, going long and having some sort of stop loss under here where we got that low. Now, of course, if that doesn't happen and you get a bit more of a crash style and the Fed remains behind the curve and a bit tough with their rhetoric while you're getting this economic slowdown, then that's when you get those short, sharp sell-offs and crashes in the market before the Fed then reacts. So you'll obviously get liquidated there on a trade, which is why I think you just keep the second half of that trade in cash or in USDT, waiting for some potential crash, wait. Then here the Fed, they get a bit soft, and then we probably recover again. And so you can actually make back the loss that you would have made if you went in here, back at getting in some bit lower if that happens, and waiting for the recovery. And then that's obviously the big bull market head. So that's just the strategy around that. I think if you're a long-term investor, we are still early, first half or sort of mid-cycle. I think it's still investing. And for trading something that we don't know if it's going to happen, I think you just split the trade into two, and potentially just take the risk on either side of that trade, or even just wait for the crash. And if it doesn't happen, hey, you just buy in higher anyway. That's your trading account. So that's how I see playing this next three months or so, because within the next 3 months, we probably get enough data where the Fed can move. And so, I think that's how it plays out. One of those scenarios. If you do trade, check out Bybit. Link in description. You can get up to $30,000 as a deposit and trading bonus. You can just check the link down below for the details. I want to talk more about the investment side and how we can use Bitcoin and crypto as tools to make our lives significantly better. Now, we can shout at the fiat system all we want and say, they're debasing the currency and blah, blah. We are never going to change that at all. It's a system that's in place. It does what it does. And what it does is debase the currency units of what they call legal tender in your country, the fiat currency. That system actually is designed to debase the purchasing power of that currency. That's really bad But us as individuals have the tools to benefit ourselves. If you know that a system is literally designed to debase the purchasing power of something, you should not be holding it for your savings or investments. Actually, it's actually something that we can take advantage of. Fiat currency is just a system, and because it's legal tender in the country and we pay our liabilities with it, mortgage, tax, whatever else, it's actually something that can benefit us, that debasement, because the debasement makes debt cheaper, which is why people, when they buy houses, they think they make money. They're actually making money on the difference between the debasement of the currency and the interest rate that they're paying, which is usually a positive difference, as in the interest rate you're paying is typically lower than the debasement rate. So that's a system we can use to our advantage. And so is Bitcoin and crypto. So again, what we need to do as an investor or a saver is think at least in 4-year plus time horizons. Now for Bitcoin and the current cycles, they're actually 4-year cycles. So maybe it's better to think in at least 2 cycle time horizons, but at least 4 to 8 years. And think of the price that we get Bitcoin at as simply a blended price of investing for at least 4 years or more. So you can take the 200-week moving average, something like that, and that's actually your cost basis for Bitcoin. Now, we can see that the CAGR for Bitcoin is 4-year CAGR is about 60%. So let's say that it comes down to maybe 40, 35. So what we're saying is if you consistently invest in BTC, you're going to be making 35% annually, right? On a CAGR basis, compound annual growth rate. That is great as a solid base of a portfolio where you can then plan for the future, right? So where we are in the current cycle, right? Bitcoin halving. This is previous cycles overlaid over this current cycle. You can see Bitcoin halving, boring zone, and then what GMI call the banana zone. So essentially that's late cycle where everything goes up and you have that big bull market. Now that's actually a time to really think about what you need in the future in terms of paying your liabilities, because this is typically the end of a big bull run with the drawdown after. So that drawdown after is important to keep in mind, because we know if we have savings, we can put that in BTC and the CAGR is 30 to 50% a year. But where people trip up is putting too much in and then not thinking ahead to what a potential drawdown would be, having too much of their value in that. You get the drawdown and then you need to meet liabilities. So it's just important to manage the portfolio. So you have your savings there and then you have your cash treasury, which is to pay liabilities. Now you can keep that in your fiat currency or you can use DeFi. Remember, we're using tools to make our lives better. So Bitcoin does that. Right, it's going up in value. Ethereum is doing that as well, but Ethereum also has the ability to use dollar stable coins, and get the risk-free rate. So you can make 5% right now on dollar stable coins, or you can use DeFi to get higher rates if you want to take more risk. That's up to the individual. But these are tools that we can use to essentially outperform the debasement rate of fiat currency. So where we are in the current cycle, mid-cycle, so investing, being active. We know that the CAGR of Bitcoin is 35, 40, 50% a year. So something around that. If you have a long-term time horizon on that money, great. You can just chill and make sure that your cash balance is enough to pay any liabilities during bear markets, which, we're not in a bear market. The price can go down, but we're not in a bear market. We're in a bull market because the macro cycle has changed. Central banks looking ahead are probably going to be more dovish. And so that's where we are. And that's really using the tools to our advantage to actually make investment returns. This bull market has actually been relatively strong, right? The price action and also the drawdowns have been relatively weak. I wish we had larger drawdowns, like those 30% drawdowns we get in previous bull markets, but just not have that. Maybe the ETF just has this kind of, this large kind of rolling bid, right? As soon as you get drawdowns, the bids start coming in. There's just more market participants doing that. So this is the current bull cycle, previous bull cycles. That's why I still think we're mid-cycle. Everything's showing that. Really the time horizon we are at is that 24, 25 is the bull market. Maybe 25 it'd be peaking out, but we're right here and we're in a strong bull market. And really, we just need to manage our portfolio for bull and bear markets so that we have enough cash to pay our liabilities. we know Bitcoin is outperforming. So we know that. The only thing that can go wrong is that we mistime it and get too aggressive at the top of a bull market, put too much in, then get drawn down and have liabilities that we can't pay, have to take losses. That's a nightmare. So we just have to manage our portfolio, and that's why we're looking at market cycles. But the general gist of it is that Bitcoin is preventing against fiat currency debasement, which is this 45% loss of purchasing power over 4 years. Right? So you need to get out and you need to manage your cash liabilities with stable coins with the risk-free rate that we can invest in. This is the current cycle too. So we are in a bull market, and this may go on for a bit longer. It doesn't seem like it's the real peak for right now. So this is Bitcoin cycle extremes. There's many different indicators right here. And the previous bull markets were very clear that the kind of blow off tops, right? That's the end of the bull market. So at these points, if you are looking to cash out a little bit, that's what we're waiting for. Those real bull markets where I'll link this below as well, because this is live and updating. So these top of bull markets is where you've really got to think, hey, do I need some cash for the next 18 months? And if you are looking to sell, I would be looking at those periods. We're in a bull market, but we're not at the peak right now. So a great piece of on-chain data to look at. I want to focus on the positivity here because it's very easy to focus on negativity and say the dollar's getting debased, unemployment's rising, but we have the tools to make our lives better and protect ourselves against that. So we can create value, save value, provide value in these assets. These are great tools for our generation. I want to focus on positivity as well. This is Ethereum and all of these scaling layers. I'll link this below as well. It's rollup.wtf. It is showing that this network is providing a ton of value for people around the world. So you've now got 250 transactions per second on the Ethereum network. This is huge scale, and scale brings with it higher valuations and profitability. So we've got Ethereum here, but we also have Optimism, Arbitrum. You have some gaming networks. You have Base right here doing 30 transactions per second, enabling people to around the world to create a wallet, get dollars to prevent themselves from their fiat currency debasing, and to earn Ethereum or wrap Bitcoin on that network, or having the Base wallet to actually have Bitcoin on the Bitcoin network. Tools that help us make our lives better. And so it's happening, it's growing, and it's insanely good for us. So I'm going to be making some updates to the crypto course at the end of this month. If you have the crypto course already, they're free for you. I'll link the crypto course down below. So 6 or 7 videos on some much more in-depth data about the cycle and what I think is going to be happening over the next year or so. I'll link everything down below, including the Bybit deposit bonus as well. I'm James, it's Money's EG. Cheers for watching, and I'll see you in the next one.